Hello again, everyone. This video covers Learning Objective 3 from Chapter 3, preparing schedules of cost of goods manufactured, aka cost of goods finished, as well as cost of goods sold, and then a corresponding income statement. So one thing for us to keep in mind is that the schedules of cost of goods manufactured and cost of goods sold really focus on our manufacturing costs only. So they contain three types of costs, really: direct materials, direct labor, and then that manufacturing overhead. All of our product costs or inventoriable cost. These schedules calculate the cost of raw materials and direct labor used in production, and then the amount of manufacturing overhead applied to production. And then we reconcile those things to determine the manufacturing costs associated with goods that were finished during the period. So that schedule of cost of goods manufactured, aka cost of goods finished, is going to end with exactly that total. What's the cost of goods manufactured for the period? Then we'll need that to determine the cost of goods sold in the period. Okay, so let's think about the flow of costs here and kind of extend what we talked about in the first video. So raw material purchases made during the period, as we talked about, are added to raw materials inventory. The ending raw materials inventory is then deducted, or could be deducted, to determine what were the raw materials used in production. So just sort of a basic inventory flow here. What we started with plus what we added to it, that was what was available for use, minus what we had left over at the end of the period must be what we used. Now those raw materials used in production, let's assume for a second they're all considered direct materials. So there's our manufacturing cost categories in the middle here: raw materials used, direct materials. Then we're going to add those other manufacturing costs: direct labor and manufacturing overhead applied. And I want to double emphasize that last word there. We're talking about overhead applied, not necessarily overhead incurred. Remember, those can be different, and we can have under and over applied overhead. We'll talk about that later, but this is overhead applied. So direct materials used plus direct labor plus overhead applied equals our total manufacturing costs, aka total product costs. Now I can reconcile that with my work in process to figure out what was actually finished this period. So what I'll do is I'll take my beginning work in process, the stuff that coming into the period was already being worked on but not finished. I'll add to that my total manufacturing costs added during this period, and that gives me my total work in process for the period. In other words, the total cost of everything I was working on at any point during this period. Now from that, I can deduct my ending work in process inventory, the stuff that at the end of the period is still not done, and what I'll be left with is my cost of goods manufactured or finished during this period. So a similar flow of inventory, if you will, when we think about these work in process costs. What I started with plus what I added to it, that's what was available, minus what's left over at the end, in this case must be what I moved to finished goods during the period. The cost of goods manufactured or finished. Now that cost of goods manufactured, as we said, is the bottom line on that schedule of cost of goods manufactured. I can then take that and reconcile it with my finished goods inventory to determine the cost of goods sold. So I'll take my beginning finished goods, stuff that was already done and ready to sell, plus what I finished and made ready to sell this period, that's my cost of goods manufactured, and that gives me my cost of goods available for sale, everything I could have sold. Then if I deduct what was still left in finished goods inventory at the end of the period, the difference must be the cost of goods I did sell this period. So cost of goods sold, out the door. So let's try a couple examples here. And again, I'll sort of talk through the question. You can pause it before I reveal the answer so you have a chance to work through it. So let's say beginning raw materials inventory was 32,000. During the month, 276,000 of raw materials were purchased. Account at the end of the month revealed that 28,000 in raw materials were still present. What's the cost of direct materials used? And assume that all raw materials here are direct materials. Pause that and then let's check your answer. So it would be the 280,000. Take our beginning inventory balance of 32,000 plus what we added to it, 276. That would have given us raw materials available of 308. minus the 28,000 that were still left over at the end of the period means we use the difference, 280,000. Okay, next up, let's say direct materials used in production was the 280,000 from a minute ago. Direct labor was 375 and 180,000 in overhead was added to production or applied to production for the month. What were total manufacturing costs, also known as total product costs, also known as total inventoriable costs for the month? Pause that real quick and then I'll have the answer. So that would be 835,000. It's just the sum of those three buckets. Direct materials used plus direct labor plus that overhead applied gives me my total manufacturing cost for the period. Okay, so let's assume now the beginning work in process was 125,000. Manufacturing costs added to production for the month were 835,000 from a minute ago. There were 200,000 in partially finished goods remaining in work in process inventory at the end of the month. What was the cost of goods manufactured or finished during the same month? Again, pause that, work through it, and I'll have the answer here. And that would be 760,000. So we've got our beginning work in process, 125,000, plus what we incurred or added to manufacturing cost this period, 835, gives us total cost of work in process of 960, minus the work in process sitting in ending inventory, 200,000, gives us a cost of goods manufactured or finished of 760,000. Okay, so since the cost of goods manufactured represents the cost of goods blank during the period, an examination of the ledger, the T accounts, would show an entry where for the total cost of goods manufactured. Look at these answers, think through them for a second, pause the video here, and then I'll have the answer right after your jump. And that would be B. Since the cost of goods manufactured represents the cost of goods finished, our entry for that exact amount would be a debit to finished goods and a credit to that work in process inventory account. We'll always have that entry in a job order costing system. Okay, another example here, continuing our previous one. Beginning finished goods inventory, let's say that was 130,000. The cost of goods manufactured for the month was the 760,000 from two problems ago. The ending finished goods inventory was 150. What's the cost of goods sold for that month? Check these answers, work through it real quick, and then I'll have the answer for you right after the break. So that would be 740,000. Right, we've got beginning inventory of 130 plus the 760,000 in cost of goods manufactured for the month. Total available then finished goods is 890,000. 890,000 minus the 150,000 ending finished goods inventory balance gives us cost of goods sold of the difference, 740,000. Okay, so that really wraps up this Learning Objective 3, all about cost of goods manufactured and cost of goods sold. Feel free to back up and review any piece you need to, and let me know if you have any questions.